Hello, welcome to the introductory session on financial services. In this session, we shall look at financial transactions, financial service institutions, financial services, why financial services, fee based and fund based services, characteristics of financial services, and the characteristics of operations in financial services. Financial transactions involve raising funds by making deposits or issuing securities, making loans, keeping assets in custody or trust, managing them to generate returns, pooling of risks by underwriting insurance and annuities, providing specialized services to facilitate these transactions. Please take a minute to think on what per you is financial institution. Financial service institutions primarily deal in originating and facilitating financial transactions. Transactions include creation, liquidation, transfer of ownership, and servicing. M.Y. Khan defines financial services as those which are concerned with the design and delivery of advice and financial products to individuals and businesses within the area of banking and related institutions, personal, financial planning, investment, real assets, insurance, and so on. As per a report published by PwC recently, India is a huge underpenetrated financial market. India presents immense opportunities to tap investors' savings and channelize them into the financial markets. However, regulatory changes, fiscal pressure, and political and social instability all mean that India is a complex business environment. This snippet clearly states that there is a huge market for financial services in India. Financial services can broadly be classified into fund-based services and fee-based services. Another classification of financial services includes wholesale and retail services. Fee-based services are provided by charging a fee from the person availing the service. Some examples of fee-based services include merchant banking services, custodian services, advisory services, credit rating services, and so on. On the other hand, fund-based services include those which retain a portion of the amount. These services include working capital requirement such as OD, bill discounting, or portfolio management, or loans and financing for venture capital, project finance, or leasing and mortgages. Another classification of financial services includes the retail and wholesale services. Retail services are availed by individuals and MSMEs. These include services such as lockers, loans for individuals, mutual funds, insurance, and so on. Wholesale financial services, on the other hand, are availed by large corporate houses. These include merchant banking, underwriting, portfolio management, corporate restructuring, factoring, and so on. The characteristics of operations in financial services include fungibility of products with an extensive use of technology. Financial services also involve high volumes and the clients are highly heterogeneous. There are repeated service encounters. There exist long-term contractual relationships between customers and firms. Customers and their sense of well-being is closely intertwined with services. Financial services also use intermediaries extensively. Last but not the least, there is a convergence of operations, finance, and marketing. Moving on to the characteristics of financial services, Financial services are monetary in nature. They directly impact the economy, and the impact is large. There are different customer patterns, and their consumption patterns differ. There are multiple distribution channels to cater to the requirements of the huge variety of customers. For example, the banking requirements of the customers in the villages may require banking correspondence, while a retail customer may use or may be provided services through CRM. Financial services also require a lot of intermediary institutions. These institutions could be such as the bank assurance, agents, and so on. Given the monetary character of the financial services require regulation and supervision by monetary authorities. Most financial services are tailor-made products. Financial services also require dealing with staff who have specialized knowledge and skills. In the next few sessions, we shall look at the 4 P's of marketing for financial services, the role of marketing of financial services, marketing intelligence through market research, customer and understanding of the customer, value creation through segmenting, targeting, and positioning, and the impact of technology on marketing of financial services. The following references have been used for the preparation of this session. That's all we have for you now. Thank you.